Hey guys, what's up? It's your boy Coach K, man. I'm back with an excellent video for you guys. You know, when I do it big. Hey, so thank you guys for rocking with me, the 58, 55 subscribers, whatever it is that I look, man. I appreciate you guys. And this video is for you guys. Like, if you for rocking with me so far, man, I'm giving you guys some good game, right? All right, so but before we get started here today, this is not financial advice. Please do not take anything that I say here as financial advice. If you're looking for financial advice, please seek a financial advisor. All right. I'm just showing you guys what it is that's working for me. With that being said, man, take a look at the present and the surprise that I have for my dedicated subscribers today. I'm going to show you guys how to leverage at a 30% correction. I know you guys are looking and saying 30%. Wow, that's a huge fall. Yes, it is. And there's a reason why I'm doing this. There's a reason why I'm doing a 30% correction. I'm going to get into that in just a moment as well. But I will tell you guys that this video will not stay up permanently, right? Um, it just won't. Like, this is a gift. Like, this is something that's amazing, and this is something that I hope no one would try to monetize off of or steal it and do whatever it is that they do. All right. So yeah, this one is one that won't stay long. I'm sorry guys, but if you're rocking with me, you're gonna get a chance to see this. All right. So what I did was these red lines right here that I made, these horizontal lines, represent a 2% fall, right? Or should I say estimated 2% fall, because I used one of the tools in TradingView and I kept going down to it, kept saying, 2%, minus 2% or whatever. So I did that all the way down to 30%, right? So what I figured out, guys, is if you're trading between these lines, right? If you trade between these lines and you limit yourself a certain amount, and that depends on whatever your account balance is, that you guys will actually be doing great on leverage, right? A lot of people probably wouldn't do good with this. And the reason why is because they don't want 5 or 10 or 15, 20% in a month's time or something like that. They want more. So they're going to be impatient. They're not going to follow this, even though it's a great leverage tool. People are feeling like they want to be rich yesterday. All right. So it's hard for someone to follow this. But let's go ahead and bring out the calculator so that I can show you guys what it is that I mean. All right. So I found out from the all-time high, right, all the way down to a 30% correction, had added up to 10,124 pips, right? Man, I took time to do this, guys. So I'm showing you how dedicated I am to this, right? And I want you guys to succeed, because again, a lot of people are not making money. And there's so many videos out here with so much technical analysis, which I do some technical analysis, but you got all kind of moving averages, you got all kind of MACDs and indicators, and and I'm not knocking any of that. However, if you are not winning, right, pay attention to this video. All right. So with that being said, man, on your Forex broker account, I use Crypto Rocket. So if I have an account with $10,124 in it, right? If I have an account with $10,124 in it, that means that I could only, right, open up positions that are 0.01 here, right? Matter of fact, let me shrink this screen. All right, let's go ahead and get into the meat and potatoes. All right. All right. 0.01 lot size, right? All right, that's here, right? I'm not going to do this all the way down, guys, but I want you guys to get what I'm saying. So if you have $10,124, right? And if you stick with a 0.01 at every level, all the way down to a 30% crash, right, you still wouldn't be stopped out. All the way down to a crash or 30% correction, you still wouldn't be stopped. stopped out. And the reason why I say that is because the 0.01, you're trading within this 2% range, right? So you're making money all the way down. Not even saying that we're going to get to a 30% correction, but with a 0.01, you're making money all the way down. And it's not any telling how much money you guys will have made about time you get all the way down to a 30% correction. You might have enough money in your account to go 40% or 50% correction, right? Because you're making money on the way down. I just want you guys to have enough money in your account just in case a 30% correction happen, right? But also, this is where you guys come in at and do some work and some due diligence. I mean, at the end of the day, it's you guys that are profiting. So you will have to do some kind of work on your end to keep up with the market and the economy. I'm not saying you have to, be a guru in economics or something like that, but just know if we're talking about interest rates right now, which is something that will move the market and the economy, you're going to see something like this that happen, right? So if you want to just hold on with trading, say like for example, right? You got all the way down to 0.010. You got all the way down here, right? And you didn't open up all of these positions, but you don't want to continue any farther because of the news, right? Then you stop trading. Sometimes just stop trading until this go into profit. I'm just telling you guys something that's logical, right? I'm not trying to like give you guys a whole strategy, but I'm trying to let you know how to leverage, and with leveraging correctly, you're going to automatically win. Forget all of the indicators, guys. Forget it. All right. So you're doing 0.01. And matter of fact, let me take this out the way because I only built this tool here for you guys to start after a 2% fall from the all-time high. So to be honest, we wouldn't even trade this 2% area. We'll trade under here and more, right? But whenever we start trading, right, trade whatever you guys can afford. If I'm telling you a 30% crash had equaled out to 10,124 pips, then why would you open up a 0.05 here and a 0.04 here and all of this? Like, stay within this 2% range. And what happens is when you guys are making money, let's see here. Where's that freaking marker? There's a marker. There we go. All right. So when you're making money and taking money when the market is moving up and down within this range, keep in mind you're making money. You're going in and out, day trading, having fun with it, right? But as soon as it leaves and goes down to the next area, you're no longer opening up another 0.01. So if you in drawdown with this guy right here, right, and you've been taking profit all up in here, but now it finally went to this level, right? You do nothing here, right? I mean, the market has already surpassed this. It already went down from this level. So pretty much when you get here, you have a 0.01 that you can open within this 2% range, right? And you can trade this 2% range. But we're not going to open any more 0.01s here, right? But you're making money. Now, if we fall again, then you start trading. You start making money in this area. But keep in mind that you in drawdown for the 0.01 that's here, the 0.01 that's here. You in drawdown when it comes to here, right? All right, so we're not opening up any more than 0.01 in these 2% ranges. I can't stress that enough. Now, the good thing about a leverage strategy like this is that when the market makes its way back up, you're now closing out what you're in drawdown with, and you got another 0.01 that you can actually play with, right? And when it goes up, I'm sorry, I went the wrong way. When it goes up again, you can close out this one when it make its way back up. So what does that mean? That means you made money here, you made money on the way down, and you're making money back up. It's pretty much what that means, right? And like I say, since we know the market is probably not going to just fall 30% because that happens every, I don't know, 7 to 10 years, we get like a 30% correction or more. So, and I'm going to show you guys that right now. No, I'm not. I'm going to make sure you guys understand what it is that I'm talking about. Trading within a 2% range, right? All right. So with that being said, man, let's move on to what I calculated the pip size to be. All right, which is 10,124. So now if you have 10,124 times 2. So if you got $20,248 balance, right? Now this turns into 0.02, right? The same with this guy, right? 0.02 on down, right? 0.02 on down. And this is only for a 30% crash. 0.02. Right? All the way down. You guys can open 0.02. So instead of making, a $1 per pipit move, you're not making 2, right? And then as your account increases, you can go from 2 to 3 to 4 to 5, right? 0.05, 0.06, all the way up to a 0.10, per this 2% trading area, right? Going down, going down. All right. Now, you guys are probably looking at these trading areas. Keep in mind, I'm on a daily time frame, right? I'm on a daily time frame. Keep that in mind. So you can look at something like this and, September, that's November, a month and something, that's 256 pips. All right, that's the daily time frame, right? But to make that money, look what happens when I go to a 1 hour time frame, right? Look what happened. And this, keep in mind, this is what the market shot down with all this inflation news, right? This is just the market shooting down. You still have the opportunity to make money all through this 2% range right here. See this? All of this is within the 2% range. It came out a little bit right here, right? But if you're trading the ranges, you probably wouldn't have took that. You'd probably wait till it came down and here somewhere. If not, then enjoy profits up here, right? Right? You could have made money here, made money there, right? Made money up in here, right? They go a little something you could have ate off of. That's 41 pips, Came down here, really made a killing. Look how this was bouncing between this 2% area. Really made a killing. And then look, we're moving back up. So now you're closing out what you're in drawdown at right here, right here. Like, come on, guys. I mean, do I got to spell it out for you? This is the hour time frame. You want me to go to the 15-minute? Like, for you can really see how much money you could actually make? Like, don't get it twisted, right? I say between 5 and 10% in a month. I'm just saying that to be safe. But, guys, you should be able to walk away, with about 20%. I'm talking compounding, compounding. Even if you walk away with a compound interest of 5% per month, that's easy. That's terribly easy with a leverage strategy like this. All right. So I don't want to talk you guys head off too long, but what I do want to show you is some proof. Here's some proof. All right. So I pull up a chart here from the drawdowns of the S&P 500. They took me all the way back on this chart to like 2007, right? But as you can see it, you can take a look, man. Pause this video, come back to it or whatever. But look at this. This was coronavirus. That's 33%, 34%. That's coronavirus. That was one of the major falls that, it's been years. All right, that we had in years. But look at this, guys. This is from 1990, right? Was some of you guys even born, or how old were you? All right. So from 1990, you see a 10% correction, 5%, 9, 7. Just take a look at the chart. Here's almost a 20%, 19.19% drawdown there. Now here's the major one. Do you guys remember 2000, which was the dot-com boom, right? S&P fell 47%. That was the dot-com boom, guys. Like, I mean, that was a major event. Do your research. 2007, I'm not 100% sure what happened there, but do your research. Find out why. All right. So in 2000, we had a 47% correction. 2007, 55. But that's a difference of 7 years before we had like a major correction. From 1990 all the way down to 2000. That's like 20 years, right? Nope. I'm sorry. I'm doing my math wrong. That's 10 years, right? But even with 10 years, man, you haven't had a 30% correction, right? All right. So then we come down to 2007 and we had one. All right. And since 2007, the next 30% correction we had was in 2020, which was coronavirus. So when do you guys think that we are going to have another 30% correction based on statistics and based on the graphs? And you can take this thing all the way back to the early 1900s, late 1800s, or whatever, right? So that's what I want to show you guys. Like, that's why I did this based off a 30% correction. You may never see this in the next 3-4 years or 5 years. You may never see it, but just utilizing it as a leverage tool, right? If you're not greedy, you still should be making about, if you're super safe, you still should get about an average of 5% a month. You still should. All right. I know some of you big guys or some guys that's been trading for a little while. I know you guys are going to pull at least 20% compounding a month out of this. I know you will. I mean, but even guys that's just starting, man, you should be able to at least get between 5 and 10. You know, if you can get 10% out of this, guys, I've done the math. If you can average, let's go ahead and write this out. If you can average a 10% return, right, on whatever your account balance is per month, right, for 12 months, at the end of the year, you should be over 200%, a little bit over 200%, right? Maybe 210%, you know, after 12 months. So just imagine being able to, and this is compounding, just being able to do 5% in a month, right? You guys should be a little bit over 100% for the year. And that's if we don't crash 30% within the next, I don't know, year or two. But based on the charts and statistics, like, why would we see another 30-something% crash happening, guys? Why? Why would we see that next year or the year after next or the year after that or the year after that? Why would we see that? Okay. So I'm showing you guys how to leverage. And please tell me in the comments, guys, tell me this is not one of the best strategies. I didn't bring out a whole bunch of lines on charts and this way and that way and all of this good stuff, man. I'm just giving you guys what it is that makes common sense. All right. I didn't get this from a book. I didn't get this from someone else. I don't know anyone else on YouTube that will break this down for you guys like this. I'm just doing a good deed because I really feel like in life, when you do good, it's going to come back to me. It's going to come back. So I'm not on YouTube to, you know, rack in subscribers. I'm going to get paid regardless. I'm getting paid regardless. I want a check from YouTube. I mean, I'm not going to turn down any free money, but I'm not going to mislead you guys in order to be compensated. I'm not going to do that. And I'm going to stress that to you. So I'm going to give you the game just like this, man. I mean, if you guys want to email me or hell, drop a cash app or donate, I don't know. I'll leave that information down. But I'm not doing this just to drag you guys along. right? There's a lot of people that sit there and do videos all day and tell you what sound good just to keep you coming back and just to keep gaining subscribers. Cut to the chase. Tell these content creators to cut to the chase. How do I make this money? I just showed you guys. All right. With that being said, you know, I appreciate you guys for watching. Again, it's your boy Coach K, one of the only content creators that's doing it like this. Hey man, thank y'all. Please subscribe if you haven't subscribed. If this is your first time, show me love. I know I just changed somebody's life. I know I just changed the trajectory of someone's trading. I know I've done it. I didn't get this stuff from anywhere, man. In real life, guys, I guess I'm just a little bit intelligent, you know? But again, thank you for watching. Subscribe, like the video, all of that good stuff. This one won't be here for long. Sorry. But if you're my subscribers, this is for you because you should get notified whenever I do this. All right. Thank you for rocking with me. I'm going to leave it up for a little bit, but this one won't be permanently left up. So thank you.